All right. So you're seeing my screen, right?
Yes, sir.
All right. So now with this established, so 2 a.m. give us a delivery to the downside. So I'll still be holding to this. So you can see how the 4-hour rejection level is an open close price here in the 1 hour. So let's play price. There's nothing to do. Okay. So if, for example, you didn't get this entry, let's look at it. You're looking at a possible entry to continue bearish after the 2 a.m. candle delivery. So since we have that, so it means that you'll be looking to take an entry. This is a bearish block, and then this is its rejection high. So it means you could have your position here, short position here. Stop loss can be above this, and then you target here. So if you have that there, so stop loss above, yeah, that 1 hour high that gave us our entry, yeah, this above it. So this is 1 to 3.05, which is not a bad RR. So looking at, because now you can see we have this engulfing to the downside here in the 1 hour and internal market structure shift. This is now the 1 hour internal market structure shift. You know, for us to have a valid entry here, looking at this engulfing, because I always say when you have engulfing in a higher time frame, when you drop to a lower time frame, you're going to see that it creates a market structure shift. So that's why when we went to 15 minutes time frame, we saw that it was a market structure shift, this engulfing here. Let's check the 15 minutes time frame. So, you know, okay, this is 30 minutes. Yeah, so market structure shift. So now the most recent one, we have this engulfing. So we have what's the 1 hour market structure shift. So it means this is our reference point here. So here in the 15 minutes, you can even refine that 1 hour bearish block to this bearish block here in the 15-minute time frame. Let's see this one here. This is the bearish. So our entry can be above here. Yeah, stop loss here. So we have 1 to 3.84. So you can see how we have an increased RR. So stop loss above this previous 1 hour high, because this is the 1 hour rejection high. So price could tap here and then fall. Fair value gap is here. So let's see. So because I think on Wednesday my entry was just this one. That's all. But I'm trying to say, okay, let's say we have a re-entry. Let's see. Okay, wow. Price just went straight to TP, but we are still bearish. This block is still valid because we are still bearish. But anyway, price got to take profits, the rejection for our rejection level. So at 3 a.m., which is now the full London session open, price got to this level, gave a rejection. You could trade bullish back into this for you to have the bearish movement, but I don't care. I want to stay with the buyers because I know I am bearish. The target is this sell side liquidity resting here. That is the target. But you know, you have to identify a next workable zone that price may react from. We had that 4-hour rejection low. You can see here in 1 hour open close price mitigation. Price could come back up before the bearishness. So you could decide to want to go bullish before the bearish. That is your decision, but that is counter trading. Since this happened at the full launch, that's the full starting out of the London session, the 3 a.m. So this was the kill zone delivery. So this could give us a push to the upside for New York to possibly continue bearish, since we've identified the candle that happened during the kill zone time. Let's check the 15 minutes time frame. 15 minutes is giving bullishness. I don't care about the bullishness. I don't care. So let's look at New York time, 7 a.m., right? The Q zone, 8 a.m. when the session starts. So we still have a reason to anticipate sell continuation because New York is yet to be activated. Let's see. Because now also you can also see we have sweep of this, price fell, broke structure to the downside. So let's play price. Let's see. Okay. You could jump bullish, but I don't care about this bullish movements. Okay. Price have traded to the upside. Okay. We refined it to the 15-minute block. Okay. So still our time, 7 a.m. New York. Let's see. Okay. Still, it's not yet our time. Let's see. Okay. All right. So now we're still about to get into our time. And price is reacting at this fair value gap. So we still have our Q zone. Since nothing has happened at this Q zone, and what we can see is this. Price is reacting from this. So I could still see price trades bullish to sweep high, to sweep this high before it falls. This could send a bullish movement. Let's just see. I don't know. Let's just see. Okay, price just fell. This is the Q zone time. Price fell bearish to the downside. Let's check 1 hour. Let's see. Okay. 1 hour. This is still holding. You know, it will show us the full delivery of the 1 hour candle. But that one just shows us just the first 30 minutes of this 1 hour. So the 1 hour shows us a rejection to the upside. So it means this bullish block is still holding. So it means that I could still be valid to still anticipate push to this entry and then fall. So if I had taken the entry from the 1 hour block, would have been in this sell movement already. But you know, I refined it to the 15 minutes. So let's just see. Hope we're together.
Yes, sir.
Okay, just see. All right, also. So because this is still being respected, price traded to the upside. So Q zone traded to the downside, but then faced rejection at this bullish and then went higher back into the entry at the full start session of the New York. So let's see what happens next. Timing is very important. Whoa, bullish to the upside. I'm still bearish. Stop loss not taken yet. Let's go to 1 hour. What happened? Okay, this is 1 hour. Okay. So let me reduce these lines so that we'll pay attention to the ones we are looking at. So this entry already got to TP. Let's stick to this one. So price came to the rejection level. Volume is still trading below it. Oh, all right. I'm still bearish. I don't care. Let's see. Okay. Price traded back, respecting the rejection level. You know, I said we should set our stop loss above this previous 1 hour rejection level because this was mitigated, but then this one was not mitigated. So we can see price come into it. So this is the bearish block entirely, but the peak is a rejection level. So it is still being respected. So imagine your stop loss was just above this. That would be bad. So we set it above the previous 1 hour. So let's see. This is New York session. The Q zone came. That's the Q zone went down to the bullish, went back up at the full starts, and then we are seeing. Anyway, let's just see how it delivers. I am bearish. That is why I stopped to the bearish side. Let's see. Okay. All right. This would hold price. Since price is now trading to the downside, meaning the rejection level is holding. The rejection level is holding. Let's see. Meaning New York session this day was bad. I already took the London. So, okay. New York again still went back to it. You can see still respecting the 1 hour bearish level refined to the 15 minutes. So let's play price. I don't need this. This is an opposing stuff. Let's flow with the trend. Price is falling. Okay. Let's see. This is a bad New York session. But anyway, this is just how I look at the market. I'm just showing you. So that's a bad New York session. If we're preparing for the next day, let's mark the time. All right, this is the time. Let's see how this finally delivered. Okay. Also, it got to the TP. But then it was a bad New York session. Nearly got us out. So, though for me to just have that my normal minimal stop loss, I would have worked with this. Set it there. And then have my stop loss above the previous high. And then target. And then target this low. So that would have been 1 to 11.1. Anyway, No problem. You don't have to overly refine like me, please. You don't have to, but I believe with practice, with time, get to understand it. So anyway, now this delivered to the downside. So we are done for this day, preparing towards the next day. Now, with such bearish volume to the downside, you're not expecting me now to say I want to jump bullish. We have a next probable draw on liquidity, this one, this week here. So let's do it with these ones. We don't need them. Now, the next thing is to head to, can check the 4-hour. So this is what we have, the push to the downside. I don't need all this. Let's just deal with there.
At this point now, we don't need to be checking at the daily and the weekly chart anymore for the week.
Yeah, because you've already established what you are looking for that week, bearish. You get it? Okay. And you've already identified the weekly level you are waiting to see price gets to. This is that weekly level.
Okay.
Since we are still bearish from the weekly perspective, and even the lower time frame has not given us any reason to be bullish. You can see, even if you say you want to do trade line, it does not giving you any reason to say you want to be bullish. So this is now what we have, bearish delivery. So we are going into a new day. We are looking at that. So we are seeing this bearish impulse. Where's the next draw on liquidity? We have this low here, and then in extension this. Then daily narrative. We want to go to the daily, mark the zone or level from the daily, so that you can now refine in the 4-hour down to the 1 hour, and then looking at how you can take your entries. So let's see the daily time frame. So all right. So now we're looking at the next trading day. That is all we're looking at. So we go to the daily time frame. So here in the daily time frame now, this is what we have. Then the daily time frame here, what I have from what I'm seeing here is this. Price came back. You can see how it returned back to this open close price that was violated. We refined that into the 4-hour that is above it, and now price fell. So what we have now for the coming day, so we have that from the daily time frame. So that is our level that we are seeing here in the daily time frame for the next trading day in the Euro USD pair. So let's let that mark. Okay. So is there any other thing to consider here? Nah, there is no any other thing by this side. Let's say maybe an open close price that was broken. No, nothing. So we just have that. And we know that if price trades an open, if price open from here, indirectly it's creating a fair value gap between this low and the new candle open. So it's like creating a fair value gap. So it means we have to see price could come here just into the zone, may not come here and continue, or price could really then dip into that unmitigated candle wick, which is an open close price, and drop. So with this established, but then the momentum is strongly bearish, and then we are aiming for this sell side. So this should be Thursday's oncoming. This is Wednesday. So this should be Thursday setup. I think, yeah, this should be Thursday setup. That chart should be in the feed, this thing, the aftermath of it. So we had this, and what I wanted to say when I shared this Thursday's move was to consider, due to the bearish volume I'm seeing, I was trying to say, okay, we may see price just come into the 50%. But then if I should give so much details, people will get confused. So that is just, the thing is so logical. You can mark a zone and price may not get to it. But then once you understand by the reason of back testing and bad testing, you get to see where price could react from. So this was the last stuff I think I posted after the aftermath of it. I wanted to see this continues to the downside to take out this sell side, because I'm still bearish and momentum is giving us the bearish side. So this was the zone I marked, but then something happened which I saw in the lower time frame, just within the candle volume. So this is where we're expecting. So let's get to the 4-hour time frame. So in the 4-hour time frame, this is not needed. That's done its job. Yep, we don't need it. So here in the 4-hour time frame, this is our daily level. The first daily level, then meaning just like, let's go back to the daily so that you get to see what I'm saying. So this is, I said, if price should open from the downside here, it's going to give us like a fair value gap. This is basically what I mean. Let's see. If price should open, immediately, it's not like we're saying that price will just come here and then fall. So you see, it starts its movement. So it means the open has created a fair value gap. So it could create that possibility that it could want to just come, tap here, and just continue without possibly necessarily coming into this unmitigated week. So we've identified the possible zones, levels it could react from. Meaning you could just come here just to fill up that fair value that I created immediately after the opening. Or then it gets here before the rejection to just fall bearish. This is story. This is how the story I look at it. So 4-hour time frame. Let's get to the 4-hour time frame. So here in the 4-hour time frame, this is what we can see. So the daily level, and now the other second daily. So within it is this 4-hour fair value gap. That's within this first level is this 4-hour, I said fair value gap, sorry, open close price, unmitigated, this candle wick. Then above the next daily, that is now inside the daily wick, it is this unmitigated rejection high. Let's see that as a line graph. Yeah, the peak of it. So that is it. So let this daily level just be in the daily time frame, since we've refined them now here. Let them just be in the daily. Okay, the next one too, just in the daily. Okay, so this is it. So let's switch to the daily. So you can see them here. The first one here, the lots. So they can see, for the one inside this week where I'm looking at, you can see this is where it is. Then for this one, the refinement, this is where it is. You can see it.
All inside the daily
area. Yeah. So back to the 4-hour. So this is it. So this is what I'll be looking at. But now, due to the bearish volume to the downside, now this movement, this buying movement definitely started from somewhere. And where is that somewhere it started from? It started from here. This buying movement. But then now it has been broken. But then now it has occurred. You get it? So it means this price doesn't trade into these daily levels and the refinement. It means this is where price could react from. This is the reason. It's a bullish order block that gave a bullish movement, but then it was broken back to the downside. So it could reclaim the price. You get it? It's supposed to send a bullish movement. That is why I said the breakout blocks, this is all by study I got to discover. It's not just those ones that happen like this, and then we expect a push and then fall. This every year is a breakout. But what you can see is a swing point. But it's a bullish order block here that gave this bullish reaction. But then it failed to continue bullish. Price just traded much more lower below it. But yeah, I know you can just face the one we refined, these daily levels. Forget about this. But then why am I sitting at this? It is because it's a 4-hour level that should give a bullish movement. But then it got violated because we are bearish. So it got violated. So price could retest it and continue bearish. Let's check 1-hour time frame. So here in 1-hour time frame, what can you now see to that's 1-hour time frame? Sorry, we checked 4-hour. Yeah, it's from 4-hour. We're going to the 1-hour. So let's get to the 1-hour time frame. So to the 1-hour time frame, what we can see here is this. This is a fair value gap. That is a bullish order block from the 1-hour time frame. From the 4-hour, sorry, here in the 1-hour, we are seeing a bullish fair value gap that's been broken, which could serve as an inversion. You get? Which could serve as an inversion. So it means if this level is going to go, let me see what happens in Asia session. That's why I said this thing is back testing will just help for better comprehension. So that's why let's just keep it simple. Let's leave it. But I took this, but let's just assume you are just working with the daily. This is it. This is it. This is it. Let's just leave it. But if you are looking at it also from this, this is a mitigation block level. This one here, this low. This is what we can see of it. This is that level. It just refines more this 4 hour, it just refines more. We can look at it at this open close price. And there was just
Sir, I have one confusion. Sir, my question is regarding we are bouncing from this fair value gap where the price is right now.
yes.
Okay. And after that, before mitigating into this fair value gap,
Yes.
we have big black candle which is change in state of delivery.
That is this one.
Yes, exactly. And then we inverse this candle.
That this guy or this one.
This imbalance we inversed.
Sorry, this one.
Which one? The black one, the black candle one. Yes, exactly. Exactly, sir. So my question is, first confirmation we got, we bounced from the 1 hour fair value gap. Second confirmation for me is we inverse this bearish sell side imbalance, buy side efficiency, and from this side I'm going to look for target the high, the drawn liquidity, but price reversed. In this type of models, I used to get a lot of time distracted with the price action
Okay.
because of this inversion, particularly because of this inversion.
All right. What you mean is you wanted to have seen something like this and then price takes this, right?
100%, yes, sir.
Okay, that was what you wanted to see. Okay.